Mic check, 1 2 1 2. What's going on, everyone? This is Jordan with Conquer Trading and Investing. We got a really strong session ahead of us. We're going to be obviously talking about Bitcoin pre-halving. We're going to be talking about what happens if the bear market wakes up. We'll go over CTM positioning, stocks. And when we get into stocks, by the way, it's not going to be just stocks. We're going to be talking about and releasing Tesla, FNQU, and then, of course, the TQQQ, the SQQQ. And then we're going to be talking and going over and covering some frequently asked questions. And then we got a surprise here. Thanks, Big Hat Tip Fisher King, Ethereum Bitcoin. And we're going to be putting all that together. We're going to be put in this session today. We're going to start off with talking about Bitcoin. We're going to be talking off about Bitcoin pre-halving, as we are approaching that 2024 halving right now. As we have seen from earlier in this week, we saw the log scale trendline breakout, right? As we've looked at seeing the underbelly breakouts take foot, we're going to look at what potentially comes next. And you can see I have this question mark over here. Obviously, nobody knows. We're going to look at not only what could potentially be some upside targets pre-halving, we're going to look at where it could go wrong if that bear does wake up. We all know February 1st, Powell's on deck. This morning's job market showed that the labor market continues to hang in there and be very strong. We also saw what else did we see today, Jordan? We saw jobs and we had the fourth quarter GDP. Again, 2.9% growth, 2 quarters of really strong growth. It gives Powell the opportunity to channel that August Jackson Hole hawkishness if he so chooses. We're going to wait and see what happens. But most of all, we're going to make sure that we stay on the right side. Let's start off by looking at this cycle over here, the first one. And I want you to focus in on this number over here. This is a fib retracement, and we're looking at the trying to hold on one second. Oh no, Jord. There we go. I got Alexa coming on here or whatever. There we go. That's what I want you to focus in on. 0.786 fib retracement level. And I also want you to see over here that actually this is a bit of resistance. I don't like this. I won't do this again. I don't like this. So sorry about the flow here, but I want to make sure that we get this right. And I like to put up my pointer. But when I'm doing it on this photo image here, what it does is it goes to zoom in. But I want you to focus where my mouse is. And I want you to see at this level over here how first this was a touch of resistance and then price hold over here as support, right? And then again, it holds over here as support until it breaks down that one area. You could see this line is indicating the halving, and you could see that price after bottoming. We looked at those underbelly breakouts, how it did retrace all the way to the 0.786 fib level. Then we take a look at what happened in the previous cycle. This is the 2016 cycle. And I want you to notice once again, at that same exact level, you saw price able to find, first of all, and hold support. And then once it broke it, it confirmed it as resistance. Once again, once we had that underbelly breakout, once that pre-halving out of the accumulation, that front running of the halving psychological aspect taking effect, you saw price retrace all the way once again to that level. Does that mean, or potentially, that could happen once again? And you could see once again, though, this one's a little different. At the same level, do you see over here that we saw strong support? It was broken and then resistance. And then after it broke above again, briefly held, collapsed, tested as resistance again. It's a very strong level once again, like the two previous cycles. And is it potentially possible that price once again could be like a magnet attracted to that area? If it were, you have to understand what the psychological aspects of the people involved in the market will be. There will be a lot of FOMO going on. There will be a lot of, I told you Bitcoin was going to make a new all-time high in 2023 before the halving. If you prepare now for what has happened in the past, just to have an idea to set your expectations, you might want to, if you're a position trader coming into that area, you might want to be looking to potentially even get into a stronger position of strength, maybe taking some off the table. Instead of a lot of people at this particular point in time looking to potentially even FOMO in. Let's take a look at, by the way, let's go ahead and add this in over here. Let's add that line into our technology adoption curve, and we'll just be watching that level. If price is able to even go anywhere remotely close to it, that is not, let's say, even remotely a given under these current dynamics. I heard some other people talking about that Bitcoin has never experienced a bear market where we've seen tightening happening, rates being raised and quantitative running. I mean, it's, if you go back to the last cycle, to the previous cycle during 2018, why Bitcoin had an 85% retracement right here, it was under the same dynamics as far as a tightening cycle, rates being raised, quantitative tighten running. They're not the same. Of course, they're not the same. Nothing's ever the same. What's different about this time? Well, the difference about this time, people said that, well, they're raising rates because of inflation and the economy's weak. Well, 9 months later, we just had 2 quarters of really strong GDP growth and a really tight labor market. So is the economy so weak? We just had one of the fastest, sharpest rate hiking cycles in history, and then put up 2 quarters of almost 3% growth, averaging over 3% growth. Strong labor market. They were doing it because of inflation. Of course, that's different. No question about it. Now, there's also a lot different when we got into this point right here where my mouse is and the Fed began pausing their rate hikes. Quantitative tightening was continuing to run. Why quantitative tightening was running, Bitcoin and risk went like this. It was the rate hikes that were the differentiator. It was not quantitative tightening. This time is different. This is the turn taking place. 50 basis point rate hike, 25 basis point rate hike, 99% chance, 99% probability markets are pricing in for February 1st, right? Quantitative tightening is running, but this time, because of the debt ceiling debacle, the US Treasury last week underwent extraordinary measures. They're draining $400 billion of their cash reserves from now until the summer. That completely counteracts all of quantitative tightening. By the way, this is when the markets broke. The markets broke in September 2019, and balance sheet expansion started again. Quantitative tightening had to stop. A lot of people thought the markets were going to break over here back in March, April, May. We looked at the economy. We said, I don't know. I think it's going to take a lot longer for something to break than people think. Let's continue to follow the technicals, watch what's happening. I don't embrace 4-year cycle anymore. Now, Jordan, you from the very bottom of the 2018 bottom in 2019, turn for turn, we're able to stay in front of it. Yeah, I agree. And people could say, well, look, the markets topped at almost the exact same time. They did. I happen to think it was because of Fed policy they topped. I understand why a lot more people brace 4-year cycle right now. And I could see that, well, if the markets do bottom over here, why it's going to bring a lot stronger case. Now, whether or not 4-year cycle theory exists because of psychological aspects of the halving, if it just happened to align with the macro or whatever have you, that's up for debate, and it makes for good conversation. We are just leaning in and watching what's happening. We looked at these underbellies. This provides really, really good signal. Why? Because we don't know that this is going to happen. We have no idea whether or not this is or not the bottom. We have no idea whether or not we are targeting anything remotely close to what has happened only 2 other times in 2 previous cycles. And we have no idea where this is going to end up. And you can say, well, there's a lot of rhyming going on. And because of that, you want to maybe say that, well, look, log scale breakout. There's a good probability that maybe this could continue. Jordan, you talk about liquidity being there, and maybe we're going to see a lot of, once again, the same things repeating themselves. Maybe, but where are we wrong? That's what I would like to know, is where we are potentially wrong. The underbelly over here gives us the best way of doing that. If price were to trade below it at that point in time, I would have to say, whoa, watch out. There's a good chance that for whatever reason or whatever narrative is going to align, we are going lower. Now, I wouldn't put, by the way, any type of double black diamond entry. That's a very steep angle. Very steep angle. I'm not looking for that. Now, you can be looking and say, well, if this trend line over here breaks, probably and good chance that we are going to see a further retracement. This broken resistance, though, is still support, or it needs to be tested as support. It is really getting below that line, and I'm going to go ahead and extend this one for you right now as well. I'm going to extend this one right over here, right? Below that area, let's call it, just to be easy, just above 17,500. That's where this is completely negated and wrong. By the way, it happened in the past in this area where we broke below. Here's a breakout of the underbelly, a retest. It never resumed up. It never made a higher high, and it did roll over. This is where you say, you know, bullish. Whoa, super cautious. It never made a lower low, and it did come back up again. But when it came back up again, that's when you regain your bullish posture. There's every reason right here to have a bullish posture if you are following the technicals, including this, the line I just pointed out, by the way. That's funny. I just told you 17,500, right? We'll call it and make it easy below there where this is negated. That also happens to be the previous cycle ceiling. What? Say that again, Jordan. What are you talking about? Let's jump over here. Let's look at the Bitcoin for a second. And we have, if we zoom out, the previous cycle ceiling, 17,250, 17,500 in that area. We've talked about that a lot when price was below it because of FTX. We talked about it as it regained it the first time and then traded below it. And then we talked about it as it regained it the second time. Anyone who was bearish as price went and triggered back above it, in my opinion, has simply been on the wrong side. And this has been a sharp rally. People have been fighting this the whole time. Don't fight it. Stay on the right side. Trade what's happening. It's going to make life a lot easier. Before we talk, I guess we're talking about right now the bear waking up and where we could possibly go wrong. Let's look at the NASDAQ. Let's go back to, we'll look at Bitcoin in 1 second. And I want you to see that, you know, we have the 2022 trend line, bear market trend line broken. A close above it, a retest, and are now resuming up. And it looks good and it looks healthy. And if you're following the technicals, the charts do not lie. The charts tell the whole story. You have to be able to say, okay, now I could see inflation has peaked, is rolling over, and we're seeing those inflationary pressures accelerate off. That could change again. We track oil. We watch oil, and we look to see if we're going to see inflationary pressures pick up at some point in 2023. But right now, that's not what's happening. We had that July hot CPI 9.1, and since then, they went sideways. They've been rolling over. And as they're rolling over, you are seeing the markets react. You're also seeing, if you're following the macro, you're seeing a turn in central bank activity as far as a lesser degree of rate hikes, and they are working towards a pause. Now, Powell's going to give us a lot more insight to exactly how they wish to frame and push this, but forget about what they say. watch what they do. And what they're doing is a lesser degree of rate hikes. They're working towards stopping them. The bears had their chance right here. You had 4 touches of this horizontal trend line. If that would have broken down, the bears would have had the opportunity to continue. If you're following the technicals, right now this is a bullish repair in the markets. When does that fail? Right? But you see this line that we have drawn in over here this week. Let's go ahead and connect those 2 lines over here. And then let's draw out this. You can see this nice little channel that price is following in. A breakdown outside of that channel will be the first indication that this breakout is failing and potentially rolling over, right? Now, it doesn't end there. Getting below this trend line where we had the breakout, the 2022 bear market, that would signal that we are seeing actually this being tested again. It could still hold. If you break and close below it, at that point, we're back to neutral. Remember when we cleared above it, we were neutral in this area. No longer with that bearish bias, neutral, because it could break down or it could break out. It broke out. We follow the charts. We don't have bias. That's a bullish breakout. It doesn't mean that it's going to be a success. It could roll over. This would be neutral once again. Breaking down below that at that point would be a very bearish event, and that would likely send up a test and potentially even a breakdown. That would be the bear awakening. You could see that also occurring on the S&P 500. We could once again just draw in a channel connecting over here, and we see that price right now is really, really just trading within this channel. It does resemble, to me, a potential pattern that could roll over. But until you get the signal, you're on the wrong side if you continue to hold what worked in 2022, and that was that bearish posture, right? We're seeing a breakout. We talk about we want to clear above this 1 touch trend line over here on the upside to signal that we're going to have any further continuation. It's still a very cautious area. Don't you think that it makes sense that markets here are extremely cautious ahead of the FOMC February 1st? Yeah, everything makes a lot of sense. This green line highlighted over here, below this channel, that would send me neutral. A breakdown of this green line, the bear is waking up. Watch out. All right, let's look at that with that type of awareness and look at Bitcoin over here. Right, I'm going to go to log scale because log scale shows very clearly the breakout of is it the 2022 bear market trend line? It's the exact same thing we're seeing taking place on equity markets. Exact same thing. Bitcoin obviously has put in a massive move up. I think it was catching up to what happened over here from the FTX collapse. And it was a reversion to the mean, right? Or is it just sniffing out and smelling that liquidity coming from China easing, liquidity coming from the US Treasury? Maybe, perhaps, but I'm looking over here and I'm seeing another level that is really important before we could even have any, let's say, confirmation that we are seeing further bullish developments take place. Right now, we remain very cautious. I think that this type of trend line for myself is very, very steep. Let me draw it back down like this. All right. I think it's a very steep. I've seen a lot of these fail and then support underneath hold. I'm just going to be aware of it. But yeah, you could tell by my voice. When my voice goes like, I'm very aware of myself. Know thyself. And when you hear that uncertainty, that cadence, it means I really don't know. And guess what? I don't need to know. I just need to follow what's happening. If I'm unsure about something, I just give it time and wait for it to be clear. Believe me, neither myself nor you have the truth. All we can do is continue trying our hardest to put all the pieces together and stay on the right side and look at everything the best we can. Before we get into Bitcoin and Ethereum and Cardano, I want us to take a look at the 10-year with you. And I want you just to see that price right now is trying on the back of this strong job market, strong GDP, to have a buy impulse take place. And I don't know whether that's an inverted head and shoulders. Where it would take you would be right into this resistance anyway. The way that I see this is that it's trying here to make a move, but it's got a lot of work to do. I see this trend line right here that I'm highlighting. It's got to get above that first before there's any opportunity to even say that we're seeing a resumption back towards the trend, and that's bonds being sold. Right now, bonds are not buying what the Fed is selling. They're not buying that at all. And then we have these two horizontal resistance lines. Price regains that area. At that point, I'm going to turn very bearish on bonds. I want to just draw this in over here. It would coincide with that, to make it even easier. It would just really coincide with the breakout of that trend line. Then you are, right now, you have a lot to recover and work through. That just makes it very easy. Underneath this line, we are looking at bonds being strong. This sell impulse continues to take hold above it, and then we could look at some type of resurgence. What about on the DXY? A lot of dollar bulls are very excited today. They're very excited because you could see that they have some green taking place. You can see the DXY, the dollar index, is up 0.4%. And they're just very bullish. Obviously, there's nothing to be bullish about. We've taken out recently this area of support, sending this even further down, breakdown, retest, resumption down. We have that to recover, and then you have this buy impulse line to regain before you have any opportunity at saying that the dollar is getting ready to go ahead and do its thing once again. It continues to be under pressure. All right. Appreciate that, my friend. I really do. And we're just here. Iron sharpens iron. It's exactly what we do, right? And we're just here trying to figure it out together and do our best to stay on the right side. Thanks for spreading the love. Thanks for smashing that like button, getting me pumped up over here. Dave, I didn't notice, actually. Thanks for letting me know that we saw that. Do you remember? It was the Bank of Australia first that came in with a lesser degree of a rate hike. And then followed by that was the Bank of England. I thought Canada already did one also. Then here's another one. And yeah, the central banks, they do act in unison. And we're seeing expectations are that the Fed is going to continue that lesser degree of rate hikes on February the 1st, putting in a 25 basis point hike. Could they surprise markets with a 50 basis point hike? Of course they could. If they really want to come in and surprise the markets, they could do that. How the market would interpret that, the market would either say, the economy's a lot stronger than we thought, that the Fed could go ahead and do that. Or they would say, you know what? I'm really happy that the Fed is doing whatever it takes to get in front of inflation. We like that. Or they would say, that's the last one. That was a policy mistake. That's exactly what happened in December 2018. Fed raised rates. They talked that they were going to continue. Markets didn't buy it. Fed pivoted just a few weeks later. All right, let's keep going. Let's move over and talk a little bit about CTM positioning. And let's take a look at what we got on the big board. So I'm going to start off here on the daily time frame. And on the daily time frame, we are looking at Bitcoin continuing to hold a buy entry taking place over here, second week of January, currently 22% into profit. We then have Ethereum with a 27% position being held on the buy side only, spot on only, more than enough to get it done and achieve your wildest goals. And then the new addition, Cardano here on the daily time frame. And we are seeing that in its entry. It's currently holding a position 1% into profit. And that's that. Now, this is kind of neat. I've added this over here. And you can see this is just looking at those account balances, the beautiful dance on the daily time frame. And I just want you to notice, here's Cardano making new all-time highs. why Ethereum and Bitcoin were running sideways. Here's an instance where Ethereum makes those new all-time highs, why Cardano is running sideways, and Bitcoin here as well. Over here in the beginning, you could see Bitcoin making those new all-time highs, continuing to make the new all-time highs, why Cardano wasn't doing much, and Ethereum was just maintaining those highs. On the 8-hour time frame, we have Bitcoin 6 hours from now potentially getting ready to enter a long trade, right? We saw Bitcoin so far starting the year off very strong, taking a buy entry, nice profit. Price rolls up, re-enters again, takes a nice profit. It's now on the sidelines. Depending on what happens with price action over the next 6 hours, either this enter long pending is going to go away, or Bitcoin will be, right now we see the CTM filter is green, ready to go, will be entering the market. Ethereum, it continues to hold that trade, now 27% into profit. Look, this is easy right now. It's easy when you enter a trade and the trades tumble into profit. You have to have the mental fortitude to be able to go through periods where price consolidates in a tight range. We saw a lot of that in the last 6 months of 2020. You have to have the mental fortitude to know that you need to continue to stay on the right side in order to, and wait for all of a sudden, whether it's a breakdown or a breakout. Why things are easy and profits come easy, I want to make sure that everyone is prepared so that when we move into a harder environment to make it through. Now, I know a lot of you are battle tested. For 2022, CTM Strong has made you battle tested. It has really developed your fortitude, your discipline, your mental agility, but it's just a constant process. We need to always stay strong. Ethereum's getting ready to exit this position as well now. If this were to subside a little bit, Ethereum would be looking to let go of this position. And Cardano's just waiting. You could see it just waiting on the sidelines. It doesn't right now have a buy order pending from 6 hours from now, and it's just waiting for what's next. Here you could see the beautiful dance on the 8-hour time frame, and you could see Cardano late in December really helping why Ethereum was in drawdown over here, 9% drawdown, running sideways. Same thing with Bitcoin, seeing those new all-time highs take effect. Again, over here in October as well. You have to go all the way back to June, and then over here was a big move over here in July to August on Ethereum, putting in that 50% gain. The beautiful dance. And here I have that same thing outlined with price over it, right? And you can see the account balance continuing to move up and to the right. And then you can see price and what's price doing along the way. Let's move over. Let's talk a little bit about stocks right now. Let's talk about stocks and let's talk about adding Tesla, the FNGU, and the TQQQ. And right over here we have the TQQQ, right? And on the left, on the right side, we have the SQQQ. These are 3-time leverage QQQ. QQQ is a tech-based ticker, and trading it with leverage offers massive opportunity over here. Let's look over here. This is going back to 2020. These are like bigger than Bitcoin gains. Nothing like Cardano, nothing like Ethereum, but look at the drawdown over here. And what's interesting, some people are trading with margin. They're able just to trade the TQQQ on the buy side and sell side. Others are not. And others might only be able to trade the SQQQ because that's when price is expected to go down, or you're looking at QQQ rolling over. You're buying here to short. It's an inverse instrument over here. And then you could see what's interesting over here. If you look at the buy side since 2020, 660% gain. If you look at the sell side, 167%. The compounding of the two equal this. And that's what's insane and the advantage of trading both sides. I don't know whether or not we're looking, I'm not able to predict the market. I mean, well, I have a little bit of history thing on the right side and do it, but it's much easier trading without bias. It's much easier not having to guess. It's much easier, just being able to methodically, without emotion, know when to be in the market, when to be out of the market, and on what side. This is going to be released to CTM. We know it was yesterday, Cardano was. This will be released in conjunction with also, hold on one second, this is going to be fun, the FNQU. This is the micro sectors, also 3 times leveraged. Look at these gains here. But I was able to really reduce the drawdown over here. Look at these gains. These gains are tremendous. Now we're talking about Ethereum-sized gains, right? And look at this. Buy side, right? In that same amount of time, look at that drawdown. It's absolutely beautiful. The short side, again, these come in threes because some people could trade with margin, the buy side and the sell side. Other people are looking to trade the inverse, right? So this is the FNQU, and this is the inverse over here, the FNQD. And one thing here, though, that's different, and I just want to point it out because when we look at the TQQQ and the SQQQ, these are the same to equal this. It's not the same here. It's different. It's not the same. The buy side is exactly the same, right? Now you're looking at compounding here, which is the difference, but the buy side is exactly the same. The short side's a little different. The short side here has a 260% return. It also has a drawdown of 32%, okay? And was not able to replicate it on the buy side here. And the overall return is a little bit less. What that does to the overall return, it's going to reduce it. It's not going to be 7,500 compounded. It will be less. I don't know exactly what the number is. But also the drawdown is also significantly less. And that's important in my book. That's very important. So that's actually something to be very excited now for myself, is you look at the ability to go ahead and for us to execute on not only the TQQQ, but also the FNQU and also Tesla. Let's take a look at Tesla right now. And Tesla, during same period I'm looking at with you, you can't see don't see the drawdown over the big letters. I could get rid of those then, huh? Let me get rid of these names really quick. Let me just come back and I want you to see the drawdown over here. When you're looking at both together, the drawdown is 32%. Hold on one second. I think I have actually here something that I want to share with you. And that's Tesla. So that's what we're coming to right now. All right, let me jump back. So drawdown over here is now down to 25%. On the buy side of the inverse is 21% over here on the buy side. So those two together is going to be lower than the 32%. The return will not be equal to, it'll be less than 7,500. The drawdown over here you've already seen on the QQQ. Moving over to Tesla, this is quite exciting as well. Having a lot of people, by the way, are also now within CTM looking at these, let's say, models to be able to execute off of options on, right? And other people are obviously looking just to trade the stock themselves. You're looking at a nice, sizable 3,500% return, 25% drawdown in Tesla. Also, just brought to my attention is that we have the Tesla at 1.5 times leverage. Now, this just begun trading in September. There's not too much data. What's interesting, though, is that from what data we do have, you could see that you're looking at, right, from that 37% return from that date that this launches in September, you're looking at an equivalent return over here, just 1.5 times higher. Same exact settings, very interesting over here. I will get them both out for you, right? Well, this one will be universal for both Tesla or TSLL. Keep tracking this. There's not really enough data yet. It's only September, but it is interesting that thus far the results are tracking 1.5 times higher as intended. Those will be out to you. When I say those, I'm talking about Tesla, I'm talking about FNQU and TQQQ within the, like by Friday. I just got Cardano out. I have to go back, and it's not easy, and I have to go over the code, get the scripts ready, get them out, and then transfer everyone who has access into them. But we are ready to get those three. We're not going to stop there, but we're making giant leaps across the board. And also, by the way, Ethereum Bitcoin at the same exact time will be also made available. We're going to look at that in 1 second. Before we do, we have one frequently asked question over here that I wanted to take a look at. So let me see what that is now as we continue. And this was from yesterday. I meant to take a look at it. I didn't. Looking for the best strategy on the 8-hour chart. Jordan, do you cancel your orders when you have no control over the stock? Well, the 8-hour, we're trading Ethereum, Bitcoin, Cardano. Daily time frame, Bitcoin, Ethereum, Cardano. Those solutions on the stock market are on the 1-hour time frame during regular market hours, right? Sleep, family, whatever, and resume later on, or let it be and stick to a stop loss, right? You need to be disciplined. Set an alarm for every 8-hour close. Spend a few minutes checking the charts. If there's nothing to execute, get on with your day. If there is, then execute. And that's the truth of it. It takes, there's nothing easy about what we do. Participating in the markets is incredibly difficult. Make sure that you're smart about it. Make sure that you surround yourself by as strong of a community and team as you can. But it's going to take effort on your part. Now, if it's a little difficult for you to execute on the 8-hour time frame, well, then that's what the daily's for. And you could execute once a day. And the returns are tremendous. No, I know the returns don't compare with the 8-hour time frame, but the returns on the daily time frame are still quite tremendous. You're looking at over here, this is Cardano 3 years. Look at that drawdown. I mean, Ethereum 3 years. It's insanity. And sometimes it gets lost about what a good return that is in a 3-year time frame. Drawdown. The daily is all you need. If you have to be able to execute. So if you're not able to trade on the 8-hour, of course, and the returns are different, right? Let me show you in that same time frame what you're looking at. I mean, this is Cardano. It's almost doubling your return. Ethereum does a lot more than that, right? Let me take out Ethereum over here. I mean, the return on Ethereum, look at the drawdown, look at the return compared to the daily. Obviously, there's much more alpha there, but you don't need that. That's if you are able to do whatever it takes and to commit to it and be disciplined. We talk about best practices, right? There's a whole section. And by the way, when you're looking at having a strategy with such a strong edge in place, it becomes about discipline. It becomes about psychology and best practices, because execution is everything. Now, most people spend their time, some of them their whole careers, trying to even develop an edge in the market that's profitable. But once you have that, this is why this is at the top. This is what becomes the most important. You don't need to stare at the charts all day. If you're trading off the daily time frame, all you need to do is set an alarm for once a day. Set it 15 minutes before the signal period. You get an email, you get a pop-up on your trading view, and if you have to take action, whether it's enter the market or exit the market, then you do that. Same thing on the 8-hour time frame. You don't need to stare at the charts all day. Set an alarm 15 minutes before the signal period, and then look to see what's going on. Now, the stocks are a lot different, right? Now, I am able to trade off the 1-hour time frame. And I know that I have to be extraordinarily disciplined. Trading, you'll hear sometimes during the live streams a little chirp. That means that I have a signal and I have to take advantage of it, right? Now, could this be automated? I mean, anything could be automated. We had everything fully automated on CTM 2022, but once we started seeing those API leaks, third parties like 3 commas experiencing those problems and hacks, it's not worth it. It's not worth it. I'm sure at some point in the future, automation is not a problem. Right now, put the extra work in. Do what has to be done. Do what has to be done. All right, let's look over at Ethereum Bitcoin. This is very exciting as well. And I'll start over here. This is, one second. I don't know if I have them up as I want. I'm looking where they are. Bear with me here. I got to get it in. Hold on one second. You got to check this out. This is insane. So let me move over and pull up a window here so I could see and get these two into the stream for you. They're probably in my downloads. Here we go. I got them right here. All right. Let me bring them in. And let me come back to y'all. All right. We were getting ready. I was getting ready to launch, to share our Ethereum Bitcoin solution. By the way, if you haven't had the opportunity to go ahead and it's the hive mind, it's absolutely extraordinary. If you haven't had the opportunity to go ahead and hit that like button, please go ahead and do that. I really appreciate the love. Drawdown is from wherever your account is at its highest point to how far it goes down. For example, you're seeing over here a 17.58% drawdown, right? So if your account is $1,000, right, it's 17.5% less. So you're looking at $830 instead of $1,000. That's what drawdown is. This, like the Ethereum Bitcoin script, I need to talk to you about this right now. And along with the Tesla, the TQQQ, and the FNQU will be released this week. It's a question of, just like it took me a few days to get the Cardano on the daily out to you, just doing all of the needed work. But those are here this week. They're ready. We're almost there. All right. So what I want to say here, Jamie, you contribute each and every day. Thank you for always being just a bright light. We're grateful for you, for your presence, and everyone plays their role. Everyone within CTM plays. If you're on the coding team and you're on the dev team, and you're playing, obviously, massive role. Big shout out, Andrew, David, Zuzu, Reza, everybody. And then the Summit team as well, and how they work in conjunction with each other, right? I can't give shout outs to everyone. Michael, Sib, Fisher King, Gap. It's just ridiculous, the amount of effort and time that is put in to develop these advanced designs that are bought back over here. We have the hive mind within CTM Core, obviously doing extraordinarily massive effort all the time. And then we've just opened up to CTM. And we're so grateful for the new presences within the community. And it's just all this beautiful relationship. But it doesn't matter if you're coding, if you're working on the advanced design, or where you are. Everyone plays their own role. And a large part of that, I mean, Head Snack, he did before he's in part of the community. He went ahead and did our theme song. So we're grateful for it all and everyone. But I want to just lean into this for 1 second and talk about, that was all blocked. Sorry about that. Hero. This is looking at, you could see the return over here. I'm trying to find it myself. I need to get rid of these comments 1 second. The return of 640% on the top there, I'm looking at right over here, right? That I'm looking at. I'm trying to get my mouse over to it, but I can't for you. The 640% on the top view with the 17.5% drawdown, 163 trades. That's Ethereum Bitcoin cross going back to 2020. Fisher King yesterday shared with us another version. It's the same drawdown. You could see that it takes much more trades, 100 more trades in 3 years, but the return is significantly higher. The bottom one is going back to 2017. And again, you can see the drawdowns are relatively the same. The amount of trades, right? Fisher King's version is way outperforming in overall performance, but the amount of trades is more. And to be honest, I'm not sure which is the preferred version. I started talking about it today with some of the Summit team, right? So like, look, it takes more trades and it drastically outperforms on a net return basis, right? Fewer profitable trades. So if you were trading that out of a hardware wallet, Bitcoin to Ethereum, what would you prefer? Fisher King, right? Probably the less trades. See, that's the thing, is that often people are looking for what is the highest return possible. We're not looking for that. What we really focus in on is what is the lowest drawdown with the highest return that is the most consistent. And then the number of trades that's taken also plays a factor. It's a very difficult decision, in my opinion, to decide which of these two someone would prefer to be able to execute off of, and for whatever reason. For that reason, I'm going to make both available. We'll have both versions available, and you decide, right? That's, you go over and you look at the full history across different time segments, and depending on what you're using it for, you decide. And that's the best way to go about it. It then brought up, as we talk about frequently asked questions once again, it then brought up the question, right? Like Fisher King, but like last year, Fisher King like introduced this extraordinary, massive spreadsheet for portfolio allocation, including looking at a portfolio of 18 different alts, 16 or 18 different alts. And you could imagine the returns on Bitcoin, Ethereum, and Cardano. This dwarfs them by the largest factor. It's unbelievable. But the thing is, trading altcoins, you have low market cap, you have really a lot of slippage. I prefer the big three, but that portfolio allocation, that spreadsheet, I'm wondering if that could help us understand and know for the 8-hour and daily time what would be the ideal portfolio allocation. The insight here, you can use it. However, I struggle more and more. You don't understand here. This is the Summit team in action, and the amount of time spent on wrestling with these problems. You see, we have much different problems than a lot of people in the markets. A lot of our problems are, wow, for Bitcoin, we have 6 highly valued candidates. We got to continue tracking them all. Which one do we want to execute off of, right? And then we have the going back quarter over quarter, year over year, different time segments, looking at drawdown, consistency, overall profits to figure out what's our preferred version. Fisher King over here, more and more time, I struggle with what the right answer is. How many years do you go back to determine your ideal allocation? Do you change your allocation depending on where the cycle we are in, bull, bear market, leverage or no leverage, etc.? I worry you'll open Pandora's box suggesting a certain allocation. Andrew, and when do you rebalance? How often? When? It's very difficult questions to answer. Very difficult questions to answer. You could see, for example, right? Let me just go back over here and I'll talk about on the 8-hour time frame. And I'm going to use this as an example. You can see right now, Cardano is running sideways after exiting new all-time high account balances. And during that time, we've seen Bitcoin outperform. How do you know ahead of time how to balance this portfolio to give it the ideal allocation right? It's very difficult to do. By trading the 3, however, you are able to reduce drawdown and have a smoother equity curve of when they're making those new all-time highs. It's things that we will continue to work with. It's that will continue to be released. Yeah, CTM Core 100% for sure. You'll have access to that. Everyone will have access to it. Par, great to see you. Right? Love that song as well. All right, everyone. Good, strong session. No, Hypernova, those 2 screenshots we're looking at over here, this is for the buy and sell side. With the script, you're able then to go ahead and look at one or the other. When that's released to you, that will be released to you very soon. When I have the script up here during my sessions, I could then go into different periods with you. Right now, I'm not going to do that though. All right, everyone. Great to be with y'all for this Thursday. Tomorrow is Friday. We got to have one of those classic Friday sessions. It's been another strong week. We continue to work hard. We continue to work hard, right? And the fruits, they're abundant. They pay off. Everyone, I hope you have a beautiful, beautiful day. I'll see you all later. God bless you, and I'll talk to you soon. I mean, Luke, so the dev team, by the way, is looking right now. They found a service that is working with the Y Compu. I forget I can't even pronounce the name. The VC fund of Yahoo, and they're looking at building within CTM a ChatGPT style AI that's able to go through the Discord, go through all the live videos, and if you have a question, you can ask the question and get all of those resources to best answer your question. I mean, the one concern and worry we have is that we cannot give any of this data, this alpha, to someone else, right? We can't take our strategies and share them with ChatGPT. ChatGPT can't compete, right? We cannot have that into any type of public outlet. That needs to be, all that data needs to be housed eternally, and lots to work through, but really exciting stuff to come. I don't know, Sharon, how someone, and I've often proposed this question. Those that are interested in Bitcoin, Ethereum, there are a lot of people who speculate. A lot of analysts speculate what's going to happen to that. We don't need to know. We just know what side to be positioned on. I myself don't trade off of it. It doesn't, it's not incorporated to any of my execution. I'm interested in how people would. The only thing I could think of is if someone wanted to go from a hardware wallet from Bitcoin to Ethereum and back and forth. It's the only way that I could think of. I'm really interested to know how other people incorporate that. And that's why we want to get that out. That's why we want to get that out to all of CTM, so that people are able then to, explore and see how they are using it. And it's iron sharpens iron. It's iron sharpens iron. The best way I know to accumulate sats is trading versus the US dollar. The performance versus the US dollar is significantly greater. We just looked at Ethereum going back 3 years. If I go back to 2017, because in 2000, we looked at the return on Ethereum, Bitcoin going back to 2000, you're looking at, this is no leverage. A 23% drawdown and an 8 million % return. It doesn't compare to what, we were looking at over here going back to 2017, the same time frame, and you're looking at a 400% return. So I don't know. I don't know. I want to know how people are able to go ahead and figure out how to best use that and why. So I'm interested in everyone's opinion. We'll get it out and we'll keep moving forward. Everyone, CTM. Have a beautiful day, everyone. Thanks for being here. I'll see you all tomorrow. Yep, it's around from what I gather, the fee of 0.7% to 1%. I imagine in the future that's going to be less, and those costs will drastically reduce those returns for sure. And again, I'm not doing it. I would like to know what people's interests are. A lot of people follow the cross. I don't know why. It doesn't offer us, what our like preferred strategies for execution are. But I'm very interested to see and know. So newcomers joining CTM that are holding a bag of Bitcoin, and then so Hypernova, could you please inside the Discord give a little insight more into that? I just want to understand it better, because if you're holding Bitcoin, and this is hard to do, if you're holding Bitcoin, what I would do is the next time that the daily had an exit signal, I would exit it. And then I would wait for the next buy signal. And I know that this wildly is going to outperform, or I believe it's wildly going to outperform. But I'm interested to know how Ethereum Bitcoin could best be utilized and used. All right, everyone. I got to go. I'll see you all tomorrow.